Yeah, let's do it.
All right, so we got the sell-off today. We saw the weakness Friday. We saw the gap down Thursday that was bought up, and then weakness Friday. That was a telltale signal that we would see weakness in the first half of the week. If you look at the newsletter and stuff, I was pretty much like, I'm expecting weakness the first half of the week, and that's what we got. And there's just a lot of headline risk, and now we got to look at previous levels of resistance and things like that to see where we hold up. For the S&P right here, we closed right at a battleground area, so we'll have to see how we open up tomorrow. Then there's 335 areas, another area, and every couple dollars down, we'll see some support. So we're gonna have to watch where the buyers put up a fight, watch for a turnaround, all that. What you thinking?
All right, so I try to make this as simple as humanly possible. Again, over the past few months, the main thing you and I have been talking about is when the trend's your friend, you just ride it. That's again that uptrend, the green light, full throttle. We slowly started to shift into more of a consolidation market these last, September and October. And we have the clear lines of 360 being the all-time highs and then 320 being major support. So again, up through 360, we want to continue to hold. Below 325, below, we want to be a little bit more cautious. But in this consolidation type of market that we might be shifting into, we want to focus on more support buybacks and selling into resistance.
Definitely.
Where in an uptrending market, we're typically buying through resistance and holding and selling higher. So as these markets in this shift, we have to kind of adjust what major setups we're looking at to take for trades each day and each week. So that's my broader outlook for the next few months.
Oh yeah, you have to buy when things look ugly and they start to look good. You start to see that buying versus the blue sky breakout. We're just kind of not in that market anymore.